thousands of families are leaving over £1,000 a year unclaimed because they think they earn too much to qualify for child benefit. But here's what most people don't know. Even if someone in the household earns £79,000, they could still be entitled to money. That's £1,354.60 every single year for one child. And it keeps going up with every extra kid. Hit that like button, subscribe for more money advice, and drop a comment below telling us if you're already claiming. Here's what's really happening. Child benefit went up from 7th April 2025, and millions of families still don't know the new rules. The payment rates increased to £26.05 a week for the first child and £17.25 a week for each additional child. That works out to £1,354.60 a year for the eldest child and £897 for every other one. But the game changed last year when the income threshold jumped from £50,000 to £60,000. Now, families who thought they couldn't claim might actually be entitled to thousands. The problem is people are confused about how it works, especially with the high-income child benefit charge. Many parents hear the word charge and think they shouldn't bother claiming at all, and that's leaving money on the table and losing national insurance credits that count towards the state pension. Let's break down exactly who gets this money and how much. Child benefit isn't means tested in the traditional sense. That means it doesn't matter how much money is in the bank or what assets the family owns. Every parent responsible for a child under 16 can claim, and there's absolutely no limit to how many children can be included. The benefit keeps going for children under 20 if they're in approved education or training. Now here's where it gets interesting with the high-income child benefit charge. If anyone in the household earns over £60,000, they don't lose the benefit automatically. Instead, the charge kicks in gradually. For every £200 earned above £60,000, the charge equals 1% of the total child benefit received. So someone earning £65,000 would pay back roughly 25% of what they receive. The charge reaches 100% when income hits £80,000, meaning at that point they'd pay back the full amount. But here's the crucial bit that most people miss. Even at £80,000 and above, it's still worth claiming child benefit. The person claiming still receives national insurance credits, which protect their state pension entitlement. For anyone taking time off work to care for children, these credits are absolutely vital. Without them, there could be gaps in the national insurance record that reduce the state pension by thousands of pounds in retirement. The charge is calculated on individual income, not household income. This means a family where both parents earn £59,000 each keeps the full benefit with no charge. But a single parent or a household where one person earns over £60,000 faces the charge, even if the total household income is lower. The previous government promised to change this to household income by April 2026, but the current government has shelved those plans. For families in the £60,000 to £80,000 bracket, there's a decision to make, and they can claim the benefit and pay the charge through self-assessment, or from summer 2025, they'll be able to pay it directly through PAYE deductions from the pay slip. This new option means employed parents won't need to complete a tax return just to handle the child benefit charge. Or they can choose not to receive the payments at all, but still register the claim to protect those national insurance credits. HMRC has made claiming incredibly simple through the app and online service. Payment can arrive in as little as 3 days after the claim is approved. That's a massive improvement from the old paper system, which could take up to 16 weeks. Over 1.2 million parents have claimed through the digital service since it launched in May 2023, and the app lets families manage everything, including updating bank details, adding children to claims, and checking payment history. There's no excuse for missing out when the process takes about 10 minutes to complete. Here's what happens when families claim child benefit properly. They receive regular 4 weekly payments straight into the bank account, giving the household budget a reliable boost. For a family with 2 children, that's over £2,251 a year. For 3 children, it's over £3,148 annually. Even families subject to the high-income child benefit charge benefit from claiming because those national insurance credits protect future pension income. Someone who stops working to raise children could lose over £50,000 from their state pension over retirement if they don't claim child benefit and get those credits. The benefit can be backdated for up to 3 months, so families should claim as soon as possible after a baby is born. Parents who previously opted out because they thought they earned too much can restart payments quickly through the app. Now here's the game-changing insight most people never discover about child benefit. Anyone earning close to the 60,000 or 80,000 thresholds can reduce their adjusted net income through pension contributions. Salary sacrifice into a workplace pension reduces the income figure that determines the child benefit charge. So someone earning £63,000 who puts £3,000 into pension through salary sacrifice drops their adjusted net income to £60,000. That completely eliminates the high-income child benefit charge while building retirement savings. Even at higher incomes, increasing pension contributions reduces the charge percentage. This strategy means keeping more of the child benefit money whilst simultaneously building long-term wealth. It's a double win that financial advisors use with clients, but most families never think about. The key is acting before the end of the tax year to maximize the benefit. Like this video, if it's helped you understand child benefit better and what you're entitled to, subscribe for more UK money tips that actually make a difference to your finances. Comment below and tell us if you'll be claiming adjusting your pension contributions. We've got more videos coming on maximizing benefits and protecting your financial future.